All right, good morning, everyone. It is September 28th. That's a Friday. Friday, September 28th, 2018. This is your daily Forex trading strategy session, hosted by Forex.Today on the Forex.Today YouTube channel. All right, so let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao, hello, ohayo, namaste, happy Friday, happy swing day. Risky, not appropriate for everyone. Oops. All right, hey, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. We appreciate you. We work hard for you. We want you to be happy. We want you to be successful. All that kind of stuff, and I am here to help. So please use me as a resource. I'm here Monday through Friday. Forex.Today YouTube channel. I will teach you technical and fundamental analysis, trader psychology, whatever else you need to know in regards to trading. Maybe it's how to build a trading rig. But anyways, making a little bit of progress on that front, so that's good. Hang on, I've lost my chat. Where did chat go? Where did my chat at? There it is. So anyways, please get involved. Please ask questions. If you want me to cover a particular currency pair, I will. If you want me to cover a particular strategy, I will try. But the bottom line is I'm here to help you. If these webinars somehow, some way contribute to your success and I am able to earn your loyalty and respect, would you please show that by visiting TradersWay.com today? Opening a demo account, get to see our back office, maybe you want to chat with our support staff, try out our various trading platforms. You can try out the fixed spread account, the variable spread account, the ECN account, and then one day when you are confident in your trading abilities and you are trying to decide who will be the prime broker to your successful Forex trading business, I really do hope that you choose Traders Way and join the Traders Way family. So please do that today. Would you please? Oh, hey, over here, there's a subscribe button. Would you subscribe that? Subscribe to that. If you click the little bell thing, what it does is when I hit stream on my computer, it goes pa-chow and alerts you. And if you respond to the alert, it brings you directly into the webinar. That way you don't have to go to YouTube and then type in a thing and do a search for the Forex.Today channel, and then you got to go to the live, click the live thing. You know, it just saves you a lot of hassle. It just brings you directly right in here. So if you want to do that, yeah, Jim, I've had a couple of bad days, so I apologize, Jim. You're important to me. I've been a bit sick. I don't know what it is. Honestly, I think it might have just been full on, just flat out exhaustion. So I apologize for that. Oh my God, euro is falling? Yeah? Is that right, eh? Cool. Hang on, I got to get a better chat window going. So my apologies, Jim. We'll get you taken care of Monday or Tuesday. Oh, USD Swiss franc, I'd be happy to do that. Oh, congratulations, Andre says congratulations on the new display. So I went with 75-inch Samsung. You can get a lot cheaper displays, but this one has a very fast refresh rate, which is good for your, or better for your eyes, that kind of stuff. So yeah, it's good enough for the girls I go with. And you can see it's the perfect size. I mean, it could be a little, it could be maybe 6 inches, 3 inches on each side, a little wider, but it's pretty good. So what I'm going to do is that allows me to take 12 of my screens down. And there'll be, you can see there's 3 on the left and 3 on the right. I'll fire those up, and basically I have all the same real estate as I had before, but just a lot less energy wasted, a lot less heat, and less heat means less air conditioning noise and all that kind of stuff. Yeah, John, it happens. You know, I'm a funny guy like that. I just, I don't know, I'm either crazy or I'm an overachiever, but sometimes I get unbalanced. And every once in a while, my body says, hey, man, you're unbalanced. So anyways, we got it taken care of. Oh, man, this view is terrible with all those lights. Looks like I have to go up to the spaceship now. Let's maybe do that. Maybe I'll move the logo over it a little better. That's a little better. But check this out. All right, so let's get going. John says, how many? Just the one. Okay, just one. All right, so we'll go through the regular pairs, yen pairs, dollar pairs, or like some of the yen pairs, some of the dollar pairs, gold and oil, and then we'll do the sort of the open it up to requests. Right, I got a request for USD Swiss franc. I'm happy to do that. Hard work pays. Actually, yes. So, like, I don't consider myself terribly smart, but I'm a pretty good worker. So that is true. It's very difficult to be successful and lazy. I wish I was a little bit smarter, and I wish I was a little bit better of a hard worker, actually. But I do all right. But I have lots of room for improvement. That's faux show. All right, so euro dollar, pound dollar, and stuff, and with an exclamation point. Sure, we'll do that, and then I guess I'll move over to Swissy. Okay, cool. So let's break this down. So this, on the bear side, remember yesterday, we were down here. I said, look, bears are going to come up here, sell this, and have it come down. Bulls are going to look for a double bottom, and then maybe a breakout. Well, bulls didn't get it. Bears got it. So the genius behind this is you just had to be bearish. Okay? That's all. Bulls had their day, then bears had theirs. All right, it's not that hard. If you recall, we were in this sideways move for a while. Okay? In one of the conversations we had, I might have had it marked up like this, but that's the monthly pivot. You can see that. But it's moving sideways. So one of the things we talked about is you have kind of a couple of choices. You could buy at the bottom, sell at the top, buy at the bottom, sell at the top. But the other thing, the more conservative trade is to let it break and then get the retracement. I hope you guys remember that part, that you could let this break and then let it retrace and sell the retracement. That's as basic of a breakout strategy as there gets. Okay? Cool. Give give me another strategy or what, if you were to describe, I guess it's better to do it this way. If you were to describe this to somebody, could it be possible that you call this a weekly swing trade? Now, I like to call this a little bit of an Arctic turtle, and if you recall what an Arctic turtle is he sticks his head out where it shouldn't be, and then, you know, pays a penalty for that. Okay? Oh, thank you, Joe. I appreciate it. Smart for a supermodel, anyways. The reason I say that is there's two things going on this chart. The weekly pivots and the monthly pivots are in play. So according to pivot point theory, on a weekly basis, that is the sell line. That's the big one. Okay? That is the big one. Don't call it a shoulder, though. Don't call it a shoulder. But sort of. Okay? But that's not really what I'm trying to get at. Okay? So let's not get too caught into this. If you look left here, it's basically sideways. Okay? So you can't have like a head and shoulder type scenario. And I don't think you mean shoulder that way, so I get it. But just to clarify for everyone else, it can't be a head and shoulders if it's a sideways market. Or some sort of shoulder. It can't be because there's no trend. You can't reverse something that's not trending. So if it's moving sideways, the only thing you can have is a breakout. Okay, so that's that. And we've already discussed this breakout type strategy. Okay? There's plenty of opportunities to have sold the breakout. Okay, but on top of that, in conjunction to, if you were fundamentally bearish, if you're fundamentally, you know, the Fed's going to raise interest rates this week, the dollar's going to get strong, euro dollar's going to fall. If that was your plan, remember, if you don't have a plan, I don't really care. You're like, Wayne, I lost money. What was your plan? Oh, I don't know. MACD told me. Well, I don't care. That's such nonsense, right? That who cares? So if you had a fundamental bias, you're like, Wayne, I'm fundamentally bearish on the euro USD, and I look for sell zones, right? Then now we're talking. Even if I disagree with you, at least I can have a conversation with you. Okay, getting to the point. This is the bearish swing for the week. Okay? The reason I say that's a bit of an Arctic turtle is that you see actually the triple, quadruple top here, and I think that's what you mean by the shoulder, but there's a top here, top here, top here, top here. The top is off the monthly pivot, isn't it? But it played out on a weekly basis too, as well. So whoever said, you know, the euro's falling, yeah, that's right. Right? And bears would have sold this Tuesday or Wednesday or Thursday, you know. But it worked out for the bears. Bulls would have bought it here, and it kind of worked for a while, didn't break out, and then, you know, and then, so bulls probably broke even here, don't you think? Bears sold and sold and sold, and they won. This one worked for the bears. But, you know, the Fed did raise interest rates. So on the short run, that should bring dollar strength. Now, I believe on the long run, it'll still weaken. Now, if there's any other currency on the planet, that wouldn't be the case. But what I'm hoping here is this does gain strength for a while and then heads up. But that's my bias. That's my plan. Okay? So I see the weekly and monthly bias in play here. So let me clean this up. Okay? And didn't we talk a lot last week about this kind of thing possibly happening? Not that it would, but this week, more than last week, we were vulnerable to such a situation. I believe I talked about it for about an hour. Yes, Kelvin. No. I've never said when they raise interest rates, the dollar will weaken. I've never said that. It doesn't make any sense. In economics, there's long run and there's short run. Okay? So when the Fed raises interest rates, that's going to, that technically, like literally technically, increases interest rates. Okay? Mortgages go up, credit cards go up, everything attached to an interest rate is attached to the Fed funds rate. Okay? So, and it's instant. All right, so people need to adjust. But on the long run, it's comparative. So this is where it gets to be an interesting conversation, and I don't want to get into the full interesting conversation today. We don't have the right time and place for it. But there's a dichotomy between those that want to receive a higher interest rate as an investment. They're like, oh my goodness, 3.0 on the 10-year T-note. That's amazing, right? If foreigners buy it, you know, come to the United States to buy U.S. treasuries, they're going to need U.S. dollars. So if they love the 10-year T-note, but, you know, most investors are not in the 10-year. They're more like in the 2-year, right? That's why we look at the 210 spread and stuff. So now on the 2-year, they're picking up what? 2.5 or something. So they're like, oh my gosh, this is so good. It's safe. It's dollar denominated. So if you're exposed to that, like Turkey is, for example, then that's a really good investment. You're pegged to the dollar. Your investment's pegged to the dollar, and you're earning pretty good in return relative to like Europe that's still paying you nothing, right? All of a sudden, 2.5 on a 2-year treasury. That sounds fantastic, right? Unless you're American. And you're like, 2%? The stock market's up 10%. Why would I want stupid 2%? We have 4% GDP. Why would I want this stupid, pathetic 2-year note? Even a 10-year, you're like, 3%? That's pathetic. So what does an American do? They're investing overseas and stuff now, right? Because they've driven up the stock market to all-time highs. So now they want better deals. So, you know, so it's funny, as the dollar gets stronger, there's more, it has a higher propensity to want to weaken because, you know, in these circumstances, like right now, the dollar's relatively strong because the economy is so awesome relative to the rest of the world, which by and large sucks. Right? Now, if the U.S. economy was doing amazing and the rest of the world was doing fantastic, the U.S. dollar would be very, very, very weak, and all the newspapers would be talking about the end of the U.S. dollar, that the euro or the yuan is going to be the new reserve currency, and the U.S. dollar is going to be worthless, and wah. Remember all that nonsense? It was only 10 years ago the world was filled with that crap. It made no sense intellectually. But it's sold a lot of books. Okay? Chuck says, Wayne, more on the 10-year T-note. My analysis suggests the current levels and likely higher levels may be consequent. No, look. We're still normalizing. So the bond market's going to fall. Rates are going up. Now, who's raising interest rates? Is it really the Fed? Well, it actually really is the Fed, but there's less and less desire to be in short-term treasuries. So that raises interest rates too. Okay? So anyways, short run, the Fed's raising interest rates, people need to adjust their portfolio, fine. Long run, this is the part you need to think of. What is the rest of the world doing? Don't worry about the US dollar. Okay? Don't like directly, because think of it this way. if the rest of the world presents good investment opportunities for American investors and hedge funds and institutions, and like a corporation could buy an offshore entity and all this kind of stuff, right? If business looks good and favorable around the world, I don't mean now, in the near future. If Europe looks like it's going to be better next year than this year, then this year is the time to buy Europe. Now, when are you going to buy Europe? Well, when you're so confident you're sitting on this huge pile of cash because you're doing so well in the U.S. market, now you're like, well, I can't buy anything in the U.S. Everything's overpriced. But, you know, Europe looks like it's improving. Maybe we should buy a Dutch company, and off they go, right? So when we get to that point, the dollar weakens, and it's because the American economy is doing good, and it's because the rest of the world is improving. So then you save Europe, then what? China is saved. You save China, then what? Australia, New Zealand, and Canada is saved. Then what? And those are saved, and then Brazil comes back online, Russia comes back online, oil prices start going up, right? Middle East comes back online, and everyone is filthy, stinking rich, and the US dollar is reported as being worthless, not worth the paper it's printed on, kind of thing. And you can just laugh at how retarded that sounds in your giant castle of gold. Sorry, palladium. Gold is so last year. Gold is out. Palladium is in. Anyways. Brooke had a big drawdown week. Brooke, didn't I start, wasn't it Friday I said to say out loud that that won't happen, that you will not give it back, that this week is going to be different than the previous, and you understand that, and you're going to be conservative, and that you're going to have a plan. A lot of people said they were going to cut their lot sizes in half. Didn't we have that conversation, Brooke? I think I did it in the open webinar, not just for the swing traders. Maybe it was just for the swing traders. Which reminds me, swing traders, we meet at 9:30 today. So come on, Brooke. Guys. Okay, you need to. All right, let's talk about that for a second. Then I'll move on. You need to get better at reading market conditions and adjusting your behavior. Okay? All of you, whoever had a big, it was very clear we had that risk. Very clear. I thought for sure I covered it. I know I absolutely did through the swing trading group, but here I did. I'm quite sure I did. Yeah, I did. That this week, meaning now, is going to be better than or different than last week, that we face different risks, that we face consolidation, we face possible reversal. We don't really know. This is kind of like a dead week, an inside week. We've achieved monthly targets. Therefore, markets are potentially could crash. We talked about having an adjustment of expectations, an adjustment of strategy. Maybe you don't trade this week at all. Maybe you cut your lot size in half, right? Yes. Then how the hell did that happen? I even said, say it out loud, this week I will not give back all these pips. Then let's not make it a failure. You need to take a giant leap right now and do something that helps you recognize what happened, what you could have done differently, what you should have done differently, and literally write down a teachable like bullet point that you could sit and teach an amateur trader. In these situations, son, I want you to recognize what happens here and do this. Here's my teachable point. And like, teach yourself. This is what I had to do when I started, because there were no gurus, there were no books. I never met a trader before. I knew investors, but I didn't know any traders. I mean, I came from venture capital and Silicon Valley. I didn't come from Wall Street. Okay? So just like freak out now, guys. Like absolutely freak out. And turn it into a learning situation so you can walk away with an asset. Not this liability of, oh my God, I was up 700 pips and then I gave 300 pips. Well, you know, nobody cares about that story. That's such a cliche, nobody wants to hear it. Right? What do you mean that the news? What, the Fed? You didn't see that coming? Right? So do something. Walk away with this asset because it'll never happen again. Yeah. Okay. I don't know what you're going to do, but you need to save this. If somebody rubs your face in it and you still don't adjust, then what's the major malfunction and what are you going to do about it? Okay. All right, so let's go. Cash. Cash wants to know what the next trades are. All right, do you trade euro or dollar? Are you a bull or a bear? See, when you ask me like, what are the next trades? It tells me you don't have a bias, right? So for example, if I'm a bear on euro dollar, I'm a bear on euro dollar. What's the next trade? I'm going to sell high. And what about the one after that? I'm going to sell high. What about the one after that? Sell high. What about the next one? Sell high. But if I'm a bull, I'm going to do the opposite, right? One point I wanted to make, I thought about it in my meditation this morning about, someone asked me about, do I use Elliott waves? They asked it in the YouTube comment section. So I responded. But the thing is, I don't use one thing. I don't use like Elliott wave, and you know, I'm not a Elliott wave trader. I don't use just Fibonacci. Like I'm not just a Fibonacci trader. I don't just rely on pivot points. I'm not a pivot point trader. I'm not a momentum trader. I'm not a scalper. I'm not a spot trader, swing trader. I'm all these things. Price action, right? All these things. What the secret sauce is the confluence. Okay, so let's say I'm a bull. Okay, cash? Cash is a bull. Great. Let's find a confluence of support. If I bought it here and here, with this being here and this being here. Okay, so let's just say somewhere around this area. So kind of where we are now. If I bought it somewhere in there, cash, and I lost money, am I a fool as a bull? And that's what it comes down to. That's all it is. Well, I got lots of reasons why this is supportive. If it went any lower than that, boy, I'd have some serious pondering to do, right? So the Fed is a fraudulent violation. All right. Violation of the, all right. See, pretty easy, cash, right? which means if I'm a bull, I need to start looking for opportunities to buy. I could do it on a small time frame like a 5-minute chart if I wanted. Yeah, Cash says that's an ideal. Okay, cool. Is it an ideal for a place for a bear to sell? No. In fact, it's an ideal place for bears to take profit. One reason it's a great place for bears to take profit is any bear that is a weekly swing trader sold it here, and that's their target. Okay? It's just a swing trade, guys. All you had to do was be a bear. Right? So how do you swing trade, right? You're supposed to sell here. Right? You're supposed to sell at this line and put your stop here. That's all you had to do, and you would have made money. And you're like, oh, wait, it could have gone up. Yeah, and then you would have lost money. Yeah, you're right. That's exactly it. Okay? The week before, this is where bulls would buy. And if so, this was their target. So what do you think happened last Friday? Well, I'm saying, look, whoever bought it there, well, let's go back. The week before, this was the same thing. This was a buy. This was the target. Okay, so this was a buy. That was the target. So on Friday, you take profit. Look, it came down. So you buy it again. On Friday, you hit your target. So what do? Take profit. Sweet. So what should you have done if you're a bull? This was plan A. This was plan B. Okay, plan A, you were up about 100 pips. Then it collapsed on you. You should have got busted out at break even. Okay. It's much easier, much easier if you're trading your bias, guys. If you're just looking at your charts, trying to ask your charts, hey charts, what should I do today? Am I a bull today? Am I a bear today? If that's what you're doing, you've already lost. And you got to start getting in the habit of proper trading. And that is trading a bias. Okay? So what's the target here? Somebody asks. Who asked that? Muhammad says here. Okay? What's the target here? All right, so if you buy here, well, where's the next resistance? Oops. Next resistance is here. I'll even tighten this up a little bit. Okay? That's the next resistance. That's the conservative target, and this is the aggressive target. Okay? But once again, that's really easy analysis. Okay? Okay. That's the ultimate target if this is going to go bullish. The conservative target is going to play it, oops, like we're in a range. So I would anticipate this one actually happening because we're not trending, are we? So when you're not trending, you buy at support and you exit at resistance, right? So where's the next level of resistance? And that's the one I like the best. It's weekly resistance, it's monthly resistance, it's price action resistance. So plan A, up, and then it drops. Plan B is probably up, drops, and then up to the next level. Well, yeah, so Joe, first of all, I don't know if you're saying 60 pips is a lot. I don't know if it's a lot. Second, one of the things we talked about last Friday was that you would cut your lot size in half. So if you're trading with a 60 pip stop, maybe 120 would have been better for you. Okay? So I can't have a bearish target yet because we're at support. Okay? The other thing that could happen if you're a bear, especially if you're an aggressive bear, is this rallies up and then it drops down into here. Okay? That's if you're an aggressive bear. There's nothing to say that that's going to happen at this point. Fundamentally, you could always argue the Fed just raised interest rates, and there would be nothing for me to counter that. I'm like, well, yeah, you're right. So that would be it. Which one's going to work? That's what your bias tells you guys. See, I don't know if which one's going to work. You don't know. So therefore, you need to have some basic assumptions, hypotheses. You can say, I'm a bull, therefore support will hold. And what do you do if support doesn't hold? Stop trading. Yeah, take a small loss. What's the big deal? Right? If you're a bear, you're like, this is going to break. Okay? So you're going to sell it high and break it. Great. Do you know if that's going to happen? No, it's just a bias. But it tells you, it's like a filter. If you filter out all the noise, and now suddenly you know where to sell. Right? Suddenly you know where to sell because you have a bias, you have a plan. So the fact that you know you want to sell is half the battle. So now if you want to sell, you need to sell at resistance. So where's the resistance? Oh, well, I see resistance here and here. Good, that's plan A. That's plan B. See? That's not that complicated. It is just a bias. I mean, an opinion. Absolutely. And a hypothesis. Right? But I bet you've tried the other way of trading without a bias, and you probably found that you're not that successful. Maybe break even. Maybe you make 700 pips and then you give 500 of them back. I don't know. But you should have a filter because you need to know where to buy and you need to know where to sell and you need to do the analysis in advance. And those who swing both ways like a broken gate tend to either get in their trades really early or really late. Okay? So just for a year, Cash, trade my way, just for a year, and then compare it with what you have been doing and see which one is better. Now, I have another level of alpha too, where I know when I'm on, let's say like yens, for example, half the year I'm buying yen, the other half I'm selling yen. Well, actually, I kind of break my year into threes. A third of the year I'm buying yen, a third of the year I'm selling yen, and a third of the year I'm neutral on yen. Okay? So yes, it's simply a filter. Okay, we'll do pig dog. So if you recall, I think it was Monday, I created plan A, plan B, and plan C. Plan A is still working. Look at this. It's Friday, and bulls that went long on Monday are now breaking even. Bears that sold on Tuesday or Wednesday are waiting for the break, hoping to get paid. Sweet. That's all I do. That's all trading is, guys. Plan A, plan B, plan C. Do you have plan A, plan B, plan C? Right? And look at, it was all starting with this. This is the big one. This is the one that I freaked out on, right? This is the end. Right? Because on a monthly basis, this was the buy. This is where you were supposed to get out. And guess what? You should have got out. You knew 21 days in advance where to buy, where to sell. Easy peasy lemon squeezy. Right? Now here's the funny thing. If it's straightforward than that, then who's complicating it? Are you complicating your own trades? I've heard of stranger things. Okay, I want to cover that USD Swiss franc as I did US dollar, euro dollar, pound dollar, and then it was requested I do USD Swiss franc. Well, the conservative swing was here, and the target was here, right? So one could argue that it's done. Okay? That's a weekly trade, though, isn't it? So I want to mark that as resistance, and then I'm going to make a change. You are not alone. I am here with you. Though we're far apart, you're always in my heart. You are not alone. So on this basis, it's like a very wimpy month. Very wimpy month. So your maximum potential is here. Okay? But, right, so you'd have to plan like that. I don't know what happens after that, but then it seems like this is probably a problem. You know, we could even draw it a little bit higher. But something like that is very likely to. Okay. So those are monthly, right? So we'll go back, put it back on weekly. Okay, so it just comes down to how aggressive you want to play on this. You're still riding the 21. You're breaking out here, but you're running into resistance soon. You're coming up to 98 psych level. I guess it's not really that important. I bet you 99 is more important. That's what this ended up being, 99. Excuse me. So it's very bullish on this 1 hour chart. It's riding that 21 beautifully. You got an oscillator. You know, it looks like you're higher than that. So it looks bullish. Well, I don't like MS1 as a start, bro. That's why. Okay, so that puts the R1 to the top. Okay. So you're bearish on this. That's funny. So you're bearish. Why? Because it hit the pivot profit zone. Yes, Cash. We are looking at next month's and next week's pivots, of course. Now see, this is MS1. So that tells me the target is MR1. That's why I did it here. Just happens to be 99. Yeah, well, you got to caution yourself, and I mentioned this last week as well. Earlier this week. Switzerland wants a weak Swiss franc. Okay, so you know, be careful when you want to buy it. Be careful, right? But with that being said, that is technically a great opportunity. This gray area here is a great sell. Okay, and then to add this is also a great area here. So if I was going to sell it, that's what I'd be looking at. Okay. So it looks like I got accepted into a program at Harvard to go to Washington, D.C. for 2 weeks and meet with all the think tanks, some government agencies, some senators, I don't know, various administrations. I have to double check. So I have to decide whether I want to go, but it's an inside look at how Washington, D.C. works, and I get to meet the players, go to like the Cato Institute, and meeting with quite a few of the media, because the media is so powerful in Washington, D.C. I think it'd be very cool. But it's like one of these things where I think they think I'm 20 years old. Because I'm like, that's really cool. I would have liked that when I was 20. I'd love to do it now. What a neat thing to do. But at my age, what does it do? What was it going to do for me? Well, it'd just be incredibly interesting. But of course, when you're 20, they're trying to get you into a career and all that kind of stuff, right? Maybe I could work for a senator. Maybe I could work for the Cato Institute. Maybe, whatever. But, hey, man, if Harvard wants to set it up and take me around for 2 weeks, guys, 2 weeks, meeting the powerhouses of Washington, D.C., I think would be really... So I have to decide whether I want to do it. But what a cool Harvard experience. But if they only knew I was a 45-year-old Canadian, they might change their mind. They're like, yeah, Harvard student, yeah. So anyways, we'll see. All right, so let's go on to some yens, I guess. Not a lot going on. Here's an Arctic turtle. See, the real top was here, right? But everyone can see this low-hanging fruit, so they stuck their neck out and snap, right? So they got it. That's gonna, I would assume this comes down for a bit. But well played. That was a great trade. monthly, weekly, right? Look at the trade from Monday. You remember this one? Right? Let it come down, look left, buy it at the pivot, right? Central pivot. If you're buying off the central pivot, your actual target is the R2. So, I mean, conservatively, I would have looked at the confluence of two pivots, but if you didn't use monthlies and all you saw were weeklies, that's the actual target. So, dead, over, done, ish kaput ya. That's when you take, right? No way to walk away. Charles, tell him I'm selling Canadian dairy. Yeah, I guess so. Cash wants to know, are they paying for my trip? No, they are not. I'm sure Washington, D.C. for 2 weeks is cheap. I'm a Ritz-Carlton guy, and I was in D.C. last year or the year before. One of the Ritz-Carltons is like in Pentagon City at a shopping mall. I'm like, that sounds horrific. And so they have another one. And the other one is in like a converted warehouse. What the heck is this? So I'm like, nah. So I didn't stay at, I don't know. Anyways, pound yen slammed into the target once again. Could have just walked away, taken the whole week off. I want you to think about it now. It's been a week, right? In most of these situations, were you better off just walking away and taking a whole week off from trading? Would you have been better off just to go to the beach or go to the museum or spend time with old people at an old folks' home? Would you have been better off building a tree house with your kids? Or like, what was ultimately the better choice for the use of your time when we knew that was the target for the month? Okay. Well, of course, Brooke, this is because it's pound yen. So one of these things is you really got to get yourself in a situation where you know this is the Widowmaker. You know it's the Beast. The Beast is the nice name. So you're not supposed to lose a lot of money on here. And this week, what? It went from M2 to R1. How did you lose a lot of money on something that barely moved? Okay, you need to. I mean, you're becoming a very good trader, but I think that's going to be the best learning experience. Not all the winning trades you've had recently. That's the learning experience. And once again, I prefaced you that that was probably coming. Right, John, absolutely. Divorce me. Divorce you from your money. Yeah. Friendly like a divorce attorney. Yeah. This one, I could see being more trouble than the pound yen. It collapsed and came back. Not a good trade. Yes, this is a buying pivot, but you don't typically buy it on Wednesday. You buy it on Monday or Tuesday, right? So if it dropped like a ton of bricks down in here, it would have been a buy. This time of the week, no. So yeah, this to me would have been easier to lose money on than the pound yen. Well, no, but like I was laughing at this pound yen actually in the time, remember? I said, it's Theresa May, blah, 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 blah. Remember me laughing at it? I took no interest in this fall. So what was the lesson there? On the news, they're telling you this is collapsing because it's Brexit and the pound is going to be worthless. And you're listening to these people on TV, and the vast majority of them have no idea what they're talking about. It was supposed to fall there. We talked about it 3 weeks in advance. It had nothing to do with Theresa May. Well, it had something to do with Theresa May's speech. It has something to do with Brexit. But it's mostly the price it's supposed to fall. It's simply the price everyone got out. This is where everyone got in. This is where everyone got out. And the rest is just people on TV selling you newspapers and advertisements. So if you're listening to them like, this drop means it's the end of the world and we need to sell this hard and it's all over and the pound is going to be worthless, or maybe people just sold it where they didn't sell it. They took profit where they were supposed to. And now it's moving sideways. Like, if it was the end of the world, if it was the pound, if it was a hard Brexit, it's going to kill the UK economy, if it was all that, then we're supposed to be way down here now, right? You understand that? Like, we're actually supposed to be down here now? We didn't even move based on basic price action and basic pivot point strategy. We didn't do jack. Well, no, Joe says technicals first. No, I disagree. It is fundamentals. News is not fundamentals. Fundamentals created this. I have to remind you. I told you 6 months in advance and 9 months in advance, the week of this vertical line, the pound yen was going to go up. And not just up for a day or a week, but for 3 months straight. And then you need to be ready for it. Well, how the hell did that happen if technicals first? That's a hell of a guess if it's technicals first. No, right? So that's fundamentals. But like a talking head on TV and a Theresa May speech, blah, 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 blah. That's not fundamentals. That's just news. It's like if CPI is released, it's not fundamentals. Fundamentals is analysis of the long-term trend in CPI and PPI and PCE and GDP and jobs and growth and wages and income and spending. That's fundamental analysis. When you take all of that data and the trend in all that data and then apply it to a central banking policy in response to that economic data, which then affects money supply and money demand. But Theresa May going like this, is that really impacting on the long run money supply and money demand? No. It's important, sure, but in a blip of time. Now, if it comes out where, like, we know that there's going to be a hard exit and inflation's going to go through the roof, okay, well, then that's a change if it impacts the central bank. Okay? So do you think Carney, right? Do you think Mark Carney, the head of the Bank of England, was listening to Theresa May talk at this speech last Friday and said, holy shit, and then he picks up the phone. Oh my God, did you hear what Theresa May said? Change everything at the Bank of England. Sell it all, right? He didn't do anything. Nothing occurred at the Bank of England. Yeah, they talked about, yeah, he probably did call a buddy. Hey, you hear what she's saying? Yeah, this could really complicate things a bit. What did you hear about here? What are we going to say at the next speech? What do we need to take to the staff? Get so-and-so on the phone. Yeah, they're talking and they're doing things, but it's not like they hit the panic button at the Bank of England and just dumped the British pound. But that's what fundamental analysis is, guys. When does the central bank go, did you see that? Boom. Okay? That's what fundamentals are, guys. Everything else is just news. It's just a news event. Okay, so other people are saying CAD news, CAD news, CAD news. Okay, we already hit our target. Right, so we're already done with this trade. Well, thank you, Marina. Namaste. So once again, you might be on vacation right now on the beach laughing because you've already made your money on this move. Maybe this is your second chance. I get that. I can see swing traders salivating on this because it does fulfill one of the things we talked about last week at the swing trading group meeting. And they probably can see it and they're like, oh. So it is meaningful, but for example, could you buy it now? There's some sort of news. What are you going to do now? CAD strong, what are you going to do? Buy it? The news just came out. There's only two things that can be done here. Sell it. Get the heck out of the way. Hey, Trade Wars, I love your name. It's funny though, like, I mean, it's a really cool name, but it's so funny for someone to say like Forex is a scam. You're like, what? Yeah, cool name, Trade Wars, but that's just really funny. Of $6 trillion a day industry that's been around 100 years is a Ponzi scheme. That's pretty funny. Oh, you're saying because of the central banks? Okay. I get your point of view now. I get what you're saying. You're against fiat currencies and stuff. So it's not Forex. It's money supply and central banking. Okay, I get that point of view. I don't agree with it, but I get that point of view. So is Trade Wars a YouTube channel for Bitcoin taking over Forex? No. No, it's just funny. It's cool. I got 2 thumbs down today, so. Life is a Ponzi scheme. Well, I'm not, I'm thanking trade wars for the contribution. I understand the point of view. Like I said, I don't agree with it, but I understand it. Go here. Let's do some gold and do some oil. Yes, actually, let me handle this one. I was going to jump into here, but someone asked a very important question. Do I have advice on how to come back from a losing streak or a big loss? Yes, I do. What I did at a past losing period, it had to do with confidence. I had to rebuild my confidence. I made some amazingly, shockingly bad. I had a really bad week, and it was funny. I made more mistakes in the last 5 hours than I did in the first 5 days, but it just got worse and worse and worse. But I was actually quite shocked at how poorly I traded. I thought I wasn't capable of trading that poorly. And then this beast showed up, and you're like, it's sort of like, I imagine it was closer to like an alcoholic that hasn't had a drink in 25 years. And then all of a sudden you wake up and there's a bottle next to you and you're like, oh my God, did I just fall off the wagon, drink myself and passed out? Like, I didn't think I was still capable of it. Like, how the hell did that happen, right? Like, oh my God, this is horrible, right? That actually, not the alcohol part, in trading that happened to me a few years ago, where I'm like, oh my God, I didn't think I was capable of trading so poorly, but I did. So anyways, and this is back when I was coaching FX Bootcamp. And so what I did with everyone is I admitted, so, there was probably about 150 people in the room at the time, and I'm like, hey, I just traded absolutely horrifically. So for the next month or whatever it was, I said, I'm not going to even try to make money. I'm going to try to rebuild my confidence, and I'm going to get confidence from control and consistency, right? Just like I say in my book, right? That confidence comes from consistency, consistency comes from control, control comes from trade plans. So what I did is I used an OCO, one cancels other. I used an EA. You don't have to do it that way, but I did I think it was a 25 or maybe 15, maybe even 10. I might have done a 10-10 OCO. Anyways, so what I did is every trade I made, I put a 10 pip stop and a 10 pip limit. Okay? And obviously, they're only 10 pip limit. It wasn't about making money, but I wanted to prove to myself my trades were good. So every time I set up a trade, a typical trade's worth, let's say minimum 50 pips, right? So 10 pips should be like, in the first 3 minutes, I should make 10 pips. So what I did over and over and over again, probably for a month, was just hit it over and over, right? 10 pip winner, 10 pip winner, 10 pip winner, 10 pip, like over and over, 20 times a day, over and over and over, until I felt really confident that I was truly buying at support. I truly had a plan. My entries were solid. Because here's the thing. If I got mostly losers, then my entries were pathetic, right? So in that case, my entries had to be solid, because if they weren't solid, it would slip out and I'd lose 10 pips, right? So I just proved myself over and over and over and over, I can do it. I'm a great trader. I have control, I have consistency, and I will rebuild my confidence. I must have done at least 100 trades like that. And I had made back a fair amount of my losses, and I was confident again. All right, trade wars, now you've gone on a little too far. Okay, so calm down. So anyways, that's how I recovered. Okay, I focus on rebuilding your confidence, because the money doesn't matter. You'll make more money. You'll make your money back. The pips are same thing. Don't worry about it. It's just every trade's another trade. The pips will come, the pips will go, but it's not a big deal. If you're going to be a consistent trader, a confident trader over the long run, you'll have losing periods, but you'll always make money. You'll always make your pips. You'll come back, and it's not a big deal. But you can't do it if you've lost your confidence. All right. So to the person who asked about, how do you recover from a bad trading period, you got to rebuild your confidence. Yeah. Well, in that case, the winning streak was probably based on those swings, and I don't know if I set those swings up for you or if you came up with it on your own. But the worst thing is, if I influenced you into those winning trades, and then suddenly you interpret that as your greatness and your skill, you're learning, right? You're learning that you got to be careful. I also warned you to slow down and protect your wins. So that's a harder sell apparently for a lot of people. But the point is, you need to focus on control. Okay? You can't build consistency if you don't have control. And you cannot have control if you don't have a trade plan. Okay. Marina says, what's my opinion on hedging? You mean like if I'm in a losing trade? Well, why can't you just get out of a losing trade? That's the first question. So why hedge it? Why not just take the loss and then move on to winning trades? But another way of looking at it is you can make money as it comes back around. I've done that, but I haven't found that it gets you out of the hole that you're in. I think on the long run, just taking the loss is significantly better than hedging your way out or trading your way out, because I would say most of the time, most people end up making things a hell of a lot worse. So your fear shouldn't be missing out. Your fear should be taking a big loss. Your fear should be having a significant drawdown. Jim, that's fear of missing out. So if you're in a situation and you're asking yourself, should you hedge your way out, at least write it down, mark it down, and say, look, so let's say you're down 300 pips. You're like, I can just take the loss right now, and I can recover from 300 pips, right? Oh, okay. So Marina says it's an example of like, what if you're having a problem finding direction? Maybe stop trading. And like this at the beginning of this week or last Friday, I said we were coming up to a week where we probably would have a problem finding direction. So you should consider not trading at all and taking the week off. You should consider cutting your lot size in half so that you don't take a large drawdown. That's how you should be thinking, guys. Not like how to hedge a losing trade, but how to avoid having a big loss. So it's probably better taking the minus 300 than letting it get to 1,000. Because you can come back from 300, but if you're making such bad decisions that now you're down 1,000, but you could have got out the 300, like you're just as easily going to be down 2,000, right? So focus on making the right decision. If you're a confident, consistent, skilled trader, you can make 300 pips back. It's a week. It's one trade. More like probably 2 or 3 trades, but what's the big deal? But you're not going to do it if you keep having these 300 pip drops, right? So stay confident from your consistency, and your consistency comes from your control. The control comes from your trade plans. Focus on that. You can come back from a 300 pip loss. You can't come back from a 3,000 pip loss, right? So why hedge it? Just take the loss. Do you guys remember, like, I don't know if you actually read my book or not. I actually talk about in the book and taking pride in your losses. Taking pride in your losses, not your wins. Anyone can win. Of course it went up. You bought it. Like, why would that be shocking, right? If you buy a currency pair or you buy gold and it goes up, where's the big cheer? It went up. Well, of course it went up. You bought it. Like, it was supposed to go up. Why else would you have bought it? So where you take discipline and guts and strength is to get out when you're supposed to, and that's when you're losing. All right, Trade Wars, you've taken it too far. Either calm down or disappear. You're in a Forex webinar. If you keep embarrassed, or how do you say it? If you keep disgracing something that I've dedicated 15 or 20 years to, I'll have to ask you to walk out the back door before I push you out the back door. So when you come in our house, in our community, you treat it with respect. You're welcome to stay, Trade Wars. Just change the tone. Okay? Thank you. So let's finish up with gold. I went a little too long today. Let's finish up with gold. We went a little too low here. This might be stretching out a little too far. So once again, I'm not loving the opportunities that it's presenting. There's a setup for next month that I can see. There's a setup next week that I can see. So maybe you want to treat this like support and have it come around the other way, and, you know, with the idea that we're just sort of bouncing around like this. Okay? That I'm not convinced this is a breakout. Okay? Yeah. You're cool, Trade Wars. It just went too far. So hopefully I'll see you on Monday, Trade Wars. All right. So I think that's it. I think that's good. Yeah. So anyways, let's say adios. Let's do it this way. Yeah. I hope you have a wonderful weekend. I hope some of you, and this is, you know, this is really truly from the bottom of my heart, because remember, like, the way I taught myself, I had no books to read. There were no webinars, right? People would buy like DVDs and stuff, but I don't think there were even any Forex stuff. So when I started, I really had nothing. So I came up with this concept very early in my career. I said, you know, I need a mentor, but I don't know any Forex traders, especially in the Silicon Valley. Like, there's no Forex traders. I didn't live on Wall Street, right? I wasn't a banker and stuff. So it's not like I went from my investment banking department and walked over to the foreign exchange department and say, hey, what are you guys doing? Right? No, I had nothing. So where I started with was I wrote down a list of characteristics that I thought a perfect trader had. What was this person, this mythical perfect trader? They were patient, they were disciplined, right? These are things that I thought about, and so on and so forth. And I created this on paper, this mythical person, and I had the mythical person mentor me as much as I possibly could. So in a weird way, I mentored myself, being the person I thought would be the person who would mentor me, right? So I was mentored by the best foreign exchange trader in the world, the one I invented. That's the truth. That's how I did it. So now some of you guys had a rough week after 2 or 3 awesome weeks, right? There were people in my swing trading course last week. 2 people made over 500 pips. I think 3 people made over 300 pips. I think 3 people made over 200 pips. You know, it's not a big group. It's not like there was 200 people. It's a small group of, I don't know, 12 or 15 people, and half of them were quadruple or triple digits, right? So you're like, actually more than half. So most people did really well. That's in 1 week. That's pretty good. And then they gave it all back, or a lot of it back, right? Like, oh my God. Well, let's go back to this. This is an opportunity for your perfect mentor to mentor you. You need to mentor yourself. So it was clearly explained the risk that was coming up. Clearly explained that you need to adjust your trading strategy with the changing market conditions. And that you could do things like not trade at all, just walk away, be happy with what you got. Just be happy. You just nailed it. 2 or 3 weeks in a row. You're probably up over 1,000 pips for the month. Be happy with it. Walk away. Or if you want to continue trading, because that is your job if you're a professional trader, your job is to make money every day. Well, then what's your strategy if you see market conditions changing? How are you going to protect the money you've already made? Oh, well, you can cut your lot size in half, or really, if there's plan A and plan B, maybe wait for plan B and skip plan A, but adjust. So if you didn't take all that advice, then what would your mentor tell you now? Write it down. What should you have done? What did you do? What were the signs that things were not going wrong? What would you advise yourself in the future in a similar situation? And then summarize it with a teachable point of view. What advice should your mentor have given you? Now, it probably is a lot like what I did and what I shared with you. But the thing is, you need to walk away with this having been something that you learned. It's not a wound like someone didn't get you in the belly with a bayonet. It's something that's going to heal, and it might be a scar, but you're going to be tougher for it, and you're going to change. You're going to be better in that situation in the future. But you can't just roll with it like, oh, well, you know, and move on. It's just, right? You got to freak out and make this something that you carry with you, a real learnable, teachable experience that you will remember 5 years from now, 10 years from now, 20 years from now. This was something that you carried with you, because you will become a very significantly better trader because you will have learned this. And when you're in similar situations, you will adjust. And imagine now you just took your 1,000 pips and you're like, well, I know there's 1 more week left, right? Because I showed how, and I think specifically in the swing trading group, I showed how, well, you just wait and just set up next month's swing trade. So you set alarms or whatever, but they're 200-300 pips away, so you don't have to worry about it, right? And then what if you did go sit on the beach, or you did go to a museum, or you did take time off to sit in an old folks' home and listen to war stories and stuff? Like, were you better off? Not just financially, but maybe spiritually. Shoot, I would have been better off. I had to take a whole day off because I was too exhausted, but maybe that was a good week to take a day off. Didn't plan it that way, but, you know, it happens, right? So I was exhausted by collapse, but here I am, ready for the next fight. But big losses on a week like that, that's absurd. So you need to fix it. I really want you to fix it. You can fix it if you do something. But don't just let it, you know, water off a duck's back and just move on to the next week. Really spend the weekend going through it and fix this. Okay? So yes, swing traders, 9:30 over at the swing trading group. fxbootcamp.com. Peace on earth. May the pips be with you. May your profits be above average. Thank you for being a subscriber. Thank you for the likes. Thank you for the questions. Thank you for the interaction. You know, thank you to everyone here. Even Trade Wars. We're cool, Trade Wars. Namaste. Have a nice weekend. I'll see you on Monday. Cheers.